it went to an OTP, but we were able to test that out successfully. And the first 5 banks in the world who tested out this e-commerce authentication using a password or an OTP happened to be in India in 2002, 2003, and it was ICICI Bank. ICICI had just come into existence a few years around that time, and they wanted to take the lead in being the leader on e-commerce. And they were amongst the first 5 banks in the world which tested out what was called 3D secure technology or 3D secure protocol, where the customer, while he's transacting on a merchant website, is connecting through a secure session with the card issuing bank and entering the OTP or password, which today is known as 3D Secure 2.0, or Visa called it, verified by Visa, MasterCard called it MasterCard Secure. And that's a standard which was then transferred to all the other networks through EMV. So late 90s, CHIP came in to stop MaxDrive fraud. 3D Secure came in early 2002, 2003 to stop online fraud. And both of that helped in reducing fraud, but fraud migration happened. And fraud migration happened in a significant manner, particularly to Asia and Southeast Asia and Japan. And I won't get into details, but there were several banks who were impacted by millions of dollars of fraud coming in from Malaysia and Japan primarily, where they made it an industry to copy MaxStripes and send out 200, 300 people. Within 3 days, they would clean out millions of dollars on credit card limits of banks, or even a bank account balances if it's a debit card. 2002, 2003, 2004, 5, around that time, India really had a jump in e-commerce volumes. While 3D Secure was there, it was expensive for acquirers, it was expensive for merchants to implement. And issuers also found it expensive, because they had to buy a 3D Secure system, implement it, and integrate it to the cards platform. And you had merchants who came in and started really using e-commerce. And I think the tipping point for India on e-commerce was really Air Deccan. Air Deccan came in, and I remember meeting Mr. Captain Gopinath in Bangalore, and he was very clear. He's going to enable people to buy airline tickets on a phone call. You call a call center of Air Deccan, give the card number and expiry date, and he will give you a ticket. And there's one time for Air Deccan where every transaction which was done, every second transaction was a fraudulent transactions. People were buying tickets using card numbers of stolen of others, and they would buy airline tickets and sell it half price because you were able to make a quick buck. And then Kingfisher came in, they did the same thing, use card number and expiry through call centers. And they did not want to lose customers transacting, and they never stopped this card number and card number and expiry date being given on the phone. But they implemented one step. They stopped they found out, the insight was people buy these tickets at the last moment, 1 hour or 2 hours before the flight, and then sell the ticket, and the customer, the stolen ticket flies. So I don't know how many of you are aware, they had a process where now if you're flying on Air Deccan or Kingfisher, because they were not bought through a travel agent but online through a call center, you had to show the physical card used for booking. If you didn't show the physical card with a proper MaxStripe and CVV2 used for booking at the time of boarding, then you cannot take the flight. And second, you are not allowed to board the flight if you bought the ticket 1 hour before the flight took off. But all of us know, I'm not going to go into history, but Air Deccan and Kingfisher lost a couple of 100 crores in fraudulent transactions. And that was a momentous time. I think it was, if I remember right, it was late 2008 or 9 when RBI really got involved and very actively worked on seeing how e-commerce fraud could be protected, and became, I think, possibly the first country in the world which mandated that you cannot do an e-commerce transactions if you're not authenticated with an OTP or a password. It was static, password those days before dynamic passwords or OTP came in using mobile phone. So that's 3D Secure mandate, which was done for e-commerce, and that's penetrated or that sort of got picked up around the world. And today, that is the de facto standard for e-commerce. Similarly, in the physical world, as I told you, fraud migrated to Southeast Asia with a fake white plastic magstripe fraud. And the card networks again were forced to mandate EMV cards in Southeast Asia and Japan, where bulk of the fraud was originating from. So merchants had to, use terminals with chip cards, and the first attempted transaction has to be in a chip. If the chip failed, the fallback is magstripe. But if in a chip terminal, magstripe is swiped and it is fraudulent, then the loss is that of the issuer. So again, I'll repeat, merchants had to implement a EMV terminal, and they had to do the first attempted transactions on a chip card, on a chip. If the customer's max chip plastic does not have a chip, then the merchant can do the magstripe. And if that turned out to be a fraudulent transaction, the fraudulent transaction happened to be taken by the bank whose card number was on the plastic. That was what they called liability shift. That means the merchant invested in a terminal, the acquirer invested in an EMV terminal, but the issuer did not invest to put a chip card on the plastic. So they need to pay for not being responsible enough to issue a secure or a EMV card. So liability shift was introduced in the early, I think if I could be dead wrong on the date, around 2003, 2004, which meant that if you don't have chip terminals, then you are going to take the loss as a merchant or an acquirer. But if you put chip terminals or you put 3D Secure in the online world, then the issuing bank is protected, the loss is on the acquiring bank. And they introduced the concept of liability shift. So between 2004 and 5 to 2000 and possibly 13 or 14 is when the entire world migrated to EMV plastic or chip plastic. I don't think anywhere in the world after 2014, and the last country to migrate to chip was America, because America always had insurance, and that's why it did not want to implement on chip plastics and chip terminals, because nearly 50% of the world's terminals were in the US, and more than 50% of the active cards were in the US, and more than 50% of the global payments volume even today comes from the US market. So the US market did not migrate to chip and pin until the 2014, 15, and it between late 2000s to 2015, the world migrated. So today, physical world fraud problems is completely eliminated. It is there very fractional, but that has completely gone away, in the world. E-commerce world, except the United States, which continues to operate on liability shift, but the rest of the world has moved on to 3D Secure and authentication happening. So that's the history of how the card network world went about securing physical transactions and online transactions. So I'll move away now from the card network world. Between 2002 and 2006, 5 and 6, PayPal became very, very successful in the US. And anybody doing e-commerce in the US went on to use a PayPal account to transact e-commerce. And here's another insight. Visa and MasterCard, while they're the oldest card networks, but when it comes to e-commerce transactions, they're not number one in the US. It's PayPal is number one and Amazon is number two. The card networks are the third option to pay when it comes to e-commerce. So eBay and PayPal proved that the first mover generally dominates or wins in the e-commerce world or the digital world. The first set of digital transactions successful in the first most successful digital player in the planet, I think, is PayPal. And PayPal is still the most entrenched behavior, very difficult to dislodge them, and they're still number one in the world on e-commerce, especially in the US. And that lesson was very, very important to the world because they were doing an e-commerce transaction as P2P, not in the card network model of acquirer and issuer interchange. That model in some way got replicated not in the e-commerce world, but a big sort of shift happened coming into Africa in 2005 and 6 around that time is when M-Pesa was launched by Vodafone by creating a small payments company called Safaricom. So Vodafone in Kenya moved away, from being just a telecom provider, but actually launched a mobile wallet through a subsidiary called Safaricom with a brand name of M-Pesa. And the reason they did that was primarily to top up your prepaid SIM cards. So people had Vodafone prepaid SIM cards and they didn't know how to top it up. And they had to go to a physical merchant outlet and get cash and give a scratch card and scratch and get the code and put it onto the phone in order to top it up. And they wanted to eliminate that, cash and scratch card. And they set up the first, you know, electronic system where people could walk into a merchant outlet and they could online, give cash in, where you deposit cash into the agent who's doing the top up for you. Instead of giving a scratch card, the agent transfers credit, digital credit or digital online top up time. So scratch cards was eliminated and they introduced a mobile wallet and they would push money or do the top up through the agent by doing a cash in at the agent outlet. And that's when they realized, wow, if the agent can top up the airtime by taking cash, why don't we create a wallet, M-Pesa wallet, and they can store money in the wallet. So M-Pesa created not only an ability to digitally top up airtime on a prepaid SIM card, but they realized you don't even have to go to an agent. I can keep money on a mobile wallet on my phone and use the balance on my mobile wallet with a simple instructions to top up my phone without going to an agent. So they created this massive network of cash in to either do a top up at an agent outlet or do an electronic top up using the mobile wallet or the stored value on the phone or the prepaid account on the phone. And they realized there were times when people could not use all the money on the wallet. So they created a cash out network. So I can go to the same agent where I was doing cash in or doing my top up, and I say I want to withdraw money from my mobile wallet. And the agent, I would push money from my mobile wallet to the mobile wallet of the merchant P2P, and he in turn would open his cash box and give the customer cash. So M-Pesa created a cash in, cash out network for mobile top up as well as P2P transfers. So the first P2P transfers was done by PayPal in the e-commerce world. The next set of P2P transfers happened on the phone by M-Pesa using mobile wallets, and the customers had to be on the M-Pesa wallet as well as the merchant. So closed loop system was born. So between 2005 and close to I think now, pretty much all of Africa has moved on to mobile wallets, and mobile wallets started off with P2P. First, it started off with mobile top up. Then they said do ATM withdrawals because they were free or low cost. So people stopped using their bank accounts, people stopped using debit cards, people started using the cash in and cash out network because there were like 20, 25,000 merchants set up, and they were able to do top up as well as, uh, uh, P2P transfers and also do bill payments as well. So that's the trend which picked up around the world with mobile money. So that's the big trend. While that happened, of the mobile device being used using USSD in Africa, in Asia, it did not go mobile money, but Asia went through digital wallets. So the PayPal model was replicated by Alipay, which is what was a company called Ant Financials. Alipay did that in China, and then WeChat as well as did in China, and they went all across Southeast Asia, either on their own or through partnerships. So it was Gojek in Indonesia, it was KakaoPay in Korea, there's Napas in Vietnam. Even in India, you had Paytm coming around that time, 2009, 10, or whatever. And suddenly, so there were two big waves, of digitization which happened. One wave in Africa, completely moving on to the mobile phone and doing cash in, cash out and P2P transfers. And they even went and extended it to merchant payments. Merchant, you could go to a merchant, buy fruits and vegetables, and transfer money from the customer's account to the merchant's account. So that was one wave. And Alipay and WeChat in Southeast Asia and Asia coming up with a complete set of closed loop wallets. And they've all gone on to be significant. There are billions of transactions. Now, here's another data point. Alipay and WeChat do in one day more transactions than the card networks around the world on their wallets. Alipay and WeChat wallets have more transactions as just two individual wallets originating out of China than what the two card networks have combined across the world in 200 countries. They started off with P2P, but they now also use for merchant payments, and they're now called super apps because they've done P2P, they've done merchant payments, they've got loyalty. There's a whole bunch of connection. It's a connected world. They've connected every customer and merchant. That money, when it comes into the Alipay and WeChat system, or money when it comes to the M-Pesa ecosystem, it never leaves the ecosystem. So a mobile world in Africa and a complete digital world in Asia, led by Southeast Asia and China, and then slowly coming into the Indian subcontinent with, Alipay, sorry, with India Paytm. So these were the two worlds. Now, the third wave, right? So the first wave was PayPal for e-commerce. Second wave was mobile companies in Africa. Third wave was digital wallets, fintechs in a very unregulated world as closed loop in China and Southeast Asia. And the last, the last third big wave, fourth big wave, or before the five waves. So the fourth big wave was actually coming in through technology companies. The Apple came in, and Apple was very clear they're going to set up their own payments ecosystem for payments using their phone. Apple, being Apple, said they do not want any friction of the customer presenting the card or the merchant entering card number. And Apple insisted that if Visa and MasterCard want to work with Apple, then they have to go away from physical cards to tokens. They created a requirement saying, hey, Visa, MasterCard, if you don't tokenize the physical plastic and put the token into the secure element of the phone, we will not allow you to transact on our network, and we will create a new standard for merchant payments. And luckily, the card networks responded, and Apple Pay, as you know, is born, and pretty much around the world, that became a standard where you tokenize a card, and card networks mandated tokenization. Every bank in the world had to tokenize the physical plastic so that if every time you transact, it's the token which is used. The physical card number or the real card number is never used. So they reduced or eliminate the risk of card numbers being in the use in the merchant world, because a lot of fraud was happening through database compromises. Because between 2000 and roughly 2012-13, a number of merchants were doing card on file. They were storing the card number, the expiry date, CVV in their data centers, and they were compromised by fraudsters, Sony, and you can go on Home Depot. There are hundreds of merchants, and we had some of them in our part of the world and India as well. So tokenization was introduced, and pretty much the physical card was digitized and put it on the phone, and that proliferated around the world. And today, if you go into Europe, people never pay with a chip and pin. People just tap their phone and pay with the secure element, either with your tokenized card and authenticated either by biometrics or facial recognition. So the world is going, and today, I believe 70% of transactions around the world are happening at the face-to-face, at merchant outlet using Apple Pay. I live in Dubai in the last 5 years. I have never taken out a card, in this country to pay at a merchant outlet because I don't need to. Everybody has a terminal, and I pay with contactless by tapping my phone. So Apple Pay came in, and thanks to India, Google Pay and Samsung Pay became very popular because Google. So while Apple decided to tokenize and use the card rails, they use the Visa, MasterCard rails, but the payment brand became Apple Pay. Nobody now says I will pay with Visa or MasterCard. They say I'll pay with Apple Pay, but the underlying rails was Visa and MasterCard. So Visa, MasterCard continued to make money, but Apple was taking a share of that money. So that was one trend. The other trend which happened was in Asia, in the fourth wave. Apple took off in the Western world, and it proliferated around the world. The other wave is really with Google Pay, or GPay now as it's called, in India, where I think it's phenomenal. After demonetization happened, India moved into QR payments, saying India does not have the ability to afford terminals, as you all know, and have physical plastics. And suddenly 60 or 70 million QR codes came in, and you were able to link your bank account through GPay and do P2P transfers using the RTP rails. So that's the fourth wave, where technology companies really got into payments and pretty much became the front end or consumer facing brand. Nobody says now I'll pay with a State Bank of India account, but instead they'll say I'll pay with GPay. But the underlying account is still State Bank of India, or it could be HDFC or ICICI. And so that was one wave. And then the Apple Pay world, where everybody says Apple Pay, but underlying was credit or debit cards with these banks. That's the fourth wave. The last wave I call is the wave which is RTP. I think, and it started off in a few countries in Europe, like the UK and even Nigeria in Africa, but really took off in a big way in Southeast Asia, which has started off with Singapore, Malaysia, Thailand, and then of course India with UPI. And right now, the fifth wave, as I call it, is the wave of RTP. And in country after country after country in the Middle East, Africa, and Europe have gone to RTP systems, and pretty much everyday spends using a bank account has moved on to the RTP rails. And it is very successful in the countries where they created a front-end application with very good user experience. It is, GPay in India, or Swish in Switzerland, or, a couple of other options in Europe as well. So that's the fifth wave. So to me, that's how the evolution has happened. But one thing which continues to be top of mind and concern is fraud. While digital payments have come in, particularly using RTP rails, and the user experience is controlled by these technology companies, whether it's a Google Pay or a Phone Pay or a Swish or anybody else. But the underlying store, the credentials or the bank account is the store of value, I think there has been some amount of compromise and RTP fraud, and that is one area where I think there's a lot to work to do around the world because of primarily account takeovers or customer not being educated enough to understand that you can't allow somebody else to use your phone or share your OTP with somebody else, right? And I think the RBI knows this better than anybody else because RBI has been in the forefront of helping the industry understand how to tackle fraud and put controls in place. So from my experience, I told you, 5 waves of transformation. The world started off with physical plastic and physical terminals. And the first wave of, migration away from physical card and terminal happened through PayPal in the US on e-commerce and digital payments. Then migrated to Africa, which is the second wave of mobile money and mobile wallets. The third wave is the digital wallets, but through technology or super apps like Alipay and WeChat and Paytms of the world, Gojek, KakaoPay, all of Southeast Asia, and the fourth wave being Apple and Google setting off the migration to RTP systems or saying RTP can be used for merchant payments in a big manner using QR codes. And QR code has pretty much penetrated across the world. And each country has set up their own, QR standard, like what, India has done through Bharat QR. So 5 waves. And all I can say is digitization is accelerating. And the country which seems to have found the best balance between physical card, e-commerce, digital wallets, RTP systems right now is, I can very proudly say is India. And there's a lot of, wherever I go, by the way, I moved from working in India in 2014, and I worked for Visa, for example, in multiple countries until last year when I stopped working, and I do more advisory and, mentoring of companies. And I can tell you, wherever I go, people talk about the digital evolution and digital success, either in Africa or the India, digital India story or the India stack. I unfortunately I didn't have slides, but I hope I was able to sort of give you a picture of how payments have evolved and how authentication has evolved and how standards have evolved. I use the word EMV. A lot of the standards was set by a body called EMV, which was started by Europay, Mastercard, and Visa. But no, it's no longer a abbreviation. It's now become a verb itself. And EMV is the standard which is used across the world, and they control standards for the physical world as well as the e-commerce world when it comes to payments. I'll stop here, Mr. Gunveer. Thank you for the opportunity, but I'm very happy to take questions or comments from the audience. I promise to come with slides next time, Mr. Gunveer. There's a short notice, and that's why I couldn't come with slides. But I'll definitely bring slides because they will be more impactful with the audience.
Uh, a very good afternoon to everyone. This is Sachin Sharma from DPSS. Since everybody is on a forced mute, I would request if they have the questions, can they please type it in the chat box?
Yeah, I see a question from Sri, and in the chat box it says, "What's the PayPal model?" It's a great question, right? The card networks introduced a model called interchange. That is, every transaction which is done, the merchant pays a fee, which is called the merchant services fee, MSF, And as you know, it varies from, 0.5%, it could be as high as 3 or 4%. And out of that 4%, the acquiring bank or the merchant's bank keeps some of that, let's say it's 1.5%, and the merchant keeps about 0.5%, the acquirer, and 1% goes to the issuing model. In the PayPal model, it's a P2P transaction, and they will, pay a flat fee per transaction. It was a P2P model, and they agree on a fee with the merchant, and PayPal collects all of the fee. There's no concept of interchange because both the customer and the merchant are on their platform, and they have a customer relationship, and they negotiate a flat fee for every merchant. And trust me, it's more expensive than the card model. But because of the acceptance and the security of the transaction, people are willing to pay that, merchants are willing to pay the higher amount. And PayPal, particularly for cross-border payments, PayPal is very, very popular.
Everybody can now unmute themselves. I see 3 questions in the chat box already. So maybe if you can see and you want to take them one by one.
Yeah. What's the next wave, right? It's a great question, and I think the next wave, should come out of possibly India because of the scale. Is RTP systems being used to even do credit card payments? I know in India you call it credit on UPI, but I think the rails of using a dual message authorization and clearing and settlement or deferred settlement will go away. I believe digital credit will come in, no physical plastic, no physical terminal. It's all going to be digital credit, and a different business model will emerge. And hopefully, I'm part of advising one or two of those companies in India, and I think many of the countries around the world are watching. So that to me is the next wave. And second, the physical plastic will be lesser and lesser used beyond international payments in the short term. After RTP, what could be the next wave? Listen, I think I mean I don't have a crystal ball, but I believe blockchain is possibly going to move. The payment systems are all centralized right now, and I think decentralized payments need to happen. So blockchain is what's going to be used now. What is the payment credential? I don't know, but it could be CBDC or it could be something else. But it's still some time away from becoming a new standard. Having said that, I live in Dubai, as I told you. There are shops which allow me to pay with Bitcoin. So there's Bitcoin acceptance marks, but obviously it's not all across the country, all across the city. But I think digital, money or digital currency is definitely something to watch out for. But as I said, to be successful, they have to have standards, they have to have risk management and a business model, and they're hard to achieve.
Mr. Nayak, sorry to interrupt you in the flow of answering questions. There are a lot of questions, and that just reflects as to how keenly the participants have been hearing you and how interesting the talk is and how interesting the subject is. Unfortunately, I have to get on to another meeting at 4 o'clock, so I have to log off myself. So my thank you to having come here and given us a talk. You please continue the session, and you continue with the question answer till whatever time it goes. I just wanted to say my thank you and log off.
Thank you, Mr. Singh, for the opportunity.
Thank you.
Yeah.
Thank you.
Yeah. I will address a few more questions on the chat. And I've also shared my email ID if somebody wants to, send me a question or have a conversation. Very happy to do that. But I'll quickly take a few of the questions on there. One is, I think there's a question on AI. Absolutely, AI is going to take on a lot of focus. And again, I'll come from a card network perspective. The card networks are using it for fraud. Today, the card networks are able to determine and understand my pattern of spending. And they have AI models which will actually say, if somebody's chosen my credential and is trying to use the card, is actually able to alert the issuer before authorization that this is possibly not Uttam Naik doing the transaction, this is somebody else. So you might want to do an additional check. That's one. Second, they're also even going to the extent of capturing my keystrokes. For example, e-commerce. They're able to now with 3D secure, they're able to track the speed of the keypad. So let's say I give my card to my wife to transact, and she's using my card, and the speed of her typing in the card number and expiry date and OTP is different from my speed of typing. The card network knows that this is not, while it's Uttam Naik's credentials, it's not him using it, somebody else is using it. So AI is currently being primarily used for fraud management by the card networks and by some institutions for customer service. And so that's, from an AI perspective, what's the safest mode, of online payment? The safest mode is actually using your phone and Apple Pay, because those are secured credentials inside your phone. It is tokenized. You're doing biometrics authentication, and it comes from the device ID, which is with Apple and the issuing bank. So to me, if I speak as a customer, I feel most safest when I use my Apple Pay, to do e-commerce transactions. So that to me is a tokenized transactions, and that's one area where I feel most comfortable. Yes, this is another question I see. What if CVV is not printed in the cards and instead delivered through other modes? That was explored before India put the mandate on on a second factor authentication, the Indian RBI. But it was very difficult to train people and get merchant adoption going. That was the first attempt when the option which was considered but never happened. From Saurabh Rane, enabling of fast payment systems is increasing the speed of bank runs. Your thoughts on this? Yeah, that's been the biggest concern. Faster payments or fast systems have also led to some bank runs. The only suggestion is I believe that in banking world, fraud cannot be eliminated, and fraud cannot become zero. So fraud and risk management has to be balanced. And one way to do that is really put velocity limits. Customer having control on setting limits. I have a bank account here with Emirates and BD. I can set my limits every day and put the domain controls on where my account can be used. Can it be used only locally? Can it be used internationally? Can it be used only for book purchases? Can it be used for airline tickets? So I think bank runs will happen, and the only way to do that is to really put controls or domain controls and give the control to the hand of the consumer, through their mobile application, and that's where it's possible. Yeah. Next question from Vipin. Is it possible to find a password of a credit card or a debit card by using a 12-digit card number and a CVV number? I think absolutely. I think there is a possibility, and that's where the card networks are trying to move away from devaluing the card number by tokenizing it. So card numbers and CVV are not the best way to transact. In the era of CBDC, what will be the future of these digital payments? I think that is all going to be decided by regulators like yourself. I think, and regulators look for consumer protection. Regulators look for, protection on privacy of consumer data. Regulators look for fraud management. Regulators look for scale. Regulators look for trusted participants. So I think that is where I think the regulators will decide how the pace of this, thing moves. With the evolution of AI and quantum computing, this could be significant challenges to online payment in terms of cybersecurity matters. Furthermore, so don't you think much so don't you think too much on digital payments? I agree. I think your concerns are valid. That the geopolitical world, and we've seen what happened with Russia, where they were cut off from the global world. So more and more payments are becoming extremely important. In my last role when I left Visa, a lot of my time involved working with governments. And every government's question was, and obviously it's the regulators saying, I didn't know you had the power to switch off the payment network in my country. So I believe digital payments will happen, but more and more will be localized, locally regulated, locally controlled, local software providers. And I believe that's the direction it will move in. And that's the only way to protect from cybersecurity or geopolitical events from happening. And the world is learning from this. I think the Russia experience is very important for everybody to see. And you can't be dependent on one payment system. You can have multiple payment systems, and more importantly, have it local versus using third party, particularly for domestic payments. I don't see any other question.
Well, yes, I think you have taken up most of the questions. In fact, all the questions that were put in the chat box. And although Gunvi sir has already thanked you, but once again, I would like to extend thanks from the Department of Payment Settlement Systems and from RBI fraternity as well for joining us today and delivering this engaging session, because it was evident from the number of questions that popped up in the chat box subsequently. And I think you covered the entire journey right from the 90s era of evolution of cards, how the transactions were done, which would be something new to most of the youngsters here in the bank. And then you took them through the different waves in both in terms of innovations and how I think concomitant the evolution of frauds era and the safety and security measures also developed over time. So thank you so much, sir. I think your email ID has been put in the chat box. If somebody is interested to deep dive on something further, they can please reach out to you. And thank you so much once again.
No, thank you, Sachin. As I said, it's an honor. I'm very happy to come back and talk to, I think, the regulator. I spent the maximum amount of time. So when Sri Vijay Kumar reached out, I said, look, it's the best I could do to come back and not only share my knowledge and experience learned from the Indian market, but also see how I can be helpful to many of you. I guess will do a lot of good work as India continues to show the path to the world. So thank you very much.
All right. Thank you so much. So we'll conclude the session now and have a
Yes,
good day.
thank you. I'll log off, sir. Thank you.
Thank
Bye bye, everybody.